have this for aesthetics reasons. No.
For prosperity.
Prosperity. That's it. Prosperity. That's it. Okay. So, first things first is, I want to ask you guys. What do I want to ask you guys? I want to ask you guys something. Hold on. I'm gonna pull up my notes.
Okay.
Okay. Let's talk about the white elephant in the room, or the elephant in the room, I should say. And I think you mentioned you had you have tax debt, right?
Yes, we've hired a tax attorney and have come to find out that the IRS is just really stupid and they don't know how to negotiate. And basically, we're just in this never-ending loop of they keep sending us back our proposal saying this proposal is not acceptable. Here's what we think you can pay, and we keep filing an appeal, and they keep sending back the same letter, and we keep filing an appeal. So it's in this ridiculous.
The rat race. You won't get out of the rat race because, unfortunately, fortunately, I should say, based on what we're looking at, you guys do have the income, and so the government takes the position of a 10-year time frame because that's the limitations on collections, and it calculates your income over a 10-year period. And so, of course, they're saying, yeah, you can afford to pay us. And so you'll always be in this chase. So the way that we're going to mitigate some of the damages, and your attorney may or may not have advised you on this, but one of the ways we can do this is to go backwards in time. And so we were looking at your 17, your 18, and I mentioned this to you before that we found some issues in both years. And we think that amending the returns would help, definitely significantly help.
Can we go all the way back to 14, 15, 16?
We are gonna propose that we go back to 16 as the latest we can go back. You in theory could go all the way back to 14, but they won't give you any money back for taxes you paid. Now they may very well readjust the tax.
We didn't pay any taxes. That's the whole thing. We didn't have the money to pay.
We owe for 15, 16.
We owe for a little bit of 13 is almost done. 14, 15, 16, 17.
What do we owe for 14?
Oh,
I don't remember.
I have to pull all that up.
We've got it. It's I'm going to say it's around 32. Every year it just got ridiculous, more ridiculous, more ridiculous.
So guys, all together, like how much is the IRS debt that we have?
With penalties and interest, it's about $224,000 to $25,000.
And then it's still a negotiation with the IRS to return.
Yeah, right now we're negotiating with IRS. I mean, I've got other friends who are CPAs and they're pretty aggressive and they hate the IRS. And they've been telling me that we can go all the way back. He also mentioned, I know that I had a loss in 2009, I believe it was $90,000. And he was telling me that he wasn't sure on how that was applied. He said it could be applied going forward.
Yes, you can. Actually, that's right. Is this a capital gain loss or just a net operating loss?
No, it was a business loss. In 2008, we all know everything hit the shit.
Right.
So, in 09, I think it was 09 or 10. I think it was 9 where I lost 90 grand, roughly. I was negative.
Is it a BDS structural?
That was a different company called AED Structural, but I still owned it. And it was an S Corp and it flowed through to me. So it's attached to me personally.
Oh, so the question will be if we have the equity to take the loss.
I don't know. Well, the thing is the company is bankrupt at this point. BDS is another firm that I started after.
We would, Jay, I mean, for us, we would want to take a look, right, at these. We would want to look at the returns all the way back to 09, really, because then we could at least, because then we can look at it and then we can analyze it and say, yes, this makes sense. If you guys have electronic copies of 09.
I got everything.
Yeah,
perfect.
I got it all.
I mean, honestly, whatever you've given your tax attorney could probably be sent to us because we speak the same language.
Okay.
And we can take a look at 09 as well, and maybe we could come up with more. Yeah, and maybe because negotiation isn't getting us anywhere. So instead, sometimes you need to just be a little bit more dramatic and take different steps into your own hands. And part of it is amending in prior years to potentially eliminate some of that debt through them readjusting. Now, sometimes though, and this has happened, they will reject an amended return. I've had this case before where they've rejected amended returns. And so we've had to find other loopholes to get them to accept it. But usually when a taxpayer doesn't take advantage of, like, for example, the loss carry forwards, or they don't take advantage of other deductions that they were entitled to that were, like, quote unquote simple, things like this, they usually go, oh, yep, okay, that makes sense. But if we're creating new shit out of nothing, so to speak, they're going to challenge that a little bit harder.
Well, I can tell you exactly what it would be, and you can tell us if what your take is on it. Is that our person who was filing our taxes we were an LLC, and she filed it as a
Sole proprietor.
So we were double taxed. We had to pay LLC tax and sole proprietor tax. Instead of filing an LLC
Well, no,
as an
it's
S-corp
self-employment
or
tax.
self-employment tax.
She tacked on the self-employment tax.
So it was in essence a double tax. We're like, why are our taxes so high? And then we found out as an LLC, she could have been filing it as an S-corp, so we wouldn't have had that self-employment tax.
Yeah. So let's say, for example, let's just go to 09, just because that's where it seems the conversation starts. So let's say in 09, they filed you as it sounds like a Schedule C. So this is where you end up with self-employment tax, and you say, what?
09, it was a different company.
09 was a different company.
Different company. That was a different.
Oh, okay, all right. So if they so let's ignore the year, for example, and let's just talk about the overall arching theory.
Okay.
So theoretically now, they would have filed you as a Schedule C, which would have been subjected to self-employment tax. I mean, this is the issue. Now, to go back to the IRS though, and let's say, oh, but you know what? Technically in 09, well, pick a different year for you guys. Let's say 10. In 2010, we weren't supposed to be a Schedule C. We were supposed to be an S corp. So, oh, by the way, we need to file for a late election to be treated as one, or whatever, blah, blah, blah.
Right.
The government's always going to take the position of, we want our money.
Right.
And so it's up to them at their discretion to allow the election to come up. Then here's the thing though, and this is something that we want to talk about, of course, for moving forward, which is they're going to say, well, you've got this issue of, okay, you want to file as an S corp. Where are the payroll reports then for the salary? And then they're going to hit you with penalties for not filing your payroll reports on a timely fashion. And then they're going to hit you with the penalties on the the FICA tax that should have been submitted.
Gotcha. Okay.
So it's an unfortunate situation, because you're a classic scenario of like what happens when we don't plan for our taxes.
Right.
And that's exactly what we find ourselves in.
Okay.
So think of it as a really bad spanking that hopefully we're going to help you guys get out of, so that you don't have to do it ever again.
Right.
And we're going to do our best to help you guys to mitigate those, because that's what we do. We help to mitigate and sometimes eliminate, but mostly mitigate the damages.
Okay.
So that's something that we might want to take a look at, which means you guys should send us your returns for 09 to, well, we have your 17, so at least 09 to 16. Let Jay and I take a look at it, and then we're going to have a rediscussion, Jay, I think, maybe how we want to do this.
Also, I wanted to know what has been done so far on the attorney side. Is this basically he's helping or she's helping, just negotiating with IRS? Is that just how it's happening, or are they thinking about doing any changes in the return?
They're trying to get us into a payment. Is what they're trying to do.
I see.
It just doesn't work.
And we talked to another tax attorney, and his suggestion was that if nothing works out, that in October we can file bankruptcy.
Of this year?
Yeah.
Yeah, but we
don't want to do
Hold
that.
on. If we file in October, we get rid of everything but 17.
Right.
Correct.
But if we wait another year, we get rid of all of it beyond that. So that's our that's our fire alarm that we're going to pull if we have to.
It's called the nuclear option, and it's definitely allowed, with the exception of 2 years worth of present taxes. You cannot just write off through a bankruptcy. Now, what a bankruptcy does allow, though, and what sometimes does work, depending on the attorney that files the BK, is sometimes that's where the negotiation gets done in terms of negotiating the debt, but it doesn't actually go away. It just gets reclassified.
It's a rechapter.
Yeah. So normally what happens when you're trying to bankrupt for taxes, they don't allow typically for a Chapter 7, right, which is a complete obsolescence of all debt. they instead restructure it as a Chapter 13. And I just literally helped a client do through this a year ago, and they owed the government about $370,000. We did a Chapter 13 bankruptcy in their case, and they renegotiated all the way down to about $60,000, something like that. So the debt doesn't go away. It just gets renegotiated. And depending on the attorney, the outcome is different. Now, the other, again, that's nuclear option. And of course, I'm hearing you guys say, like, I don't know if I want to go down that road.
Yeah.
And you may not. So maybe you want to try to tackle it like through the amending of the returns. And we have done this, and we've been successful.
Okay.
It just takes a lot of work, a lot of effort, a lot of time, a lot of commitment. And if you guys are up for it, we're up for it. And the investment will definitely pay off in the long run, especially if it means you don't have to keep dealing with these buttholes at $224,000.
Right. And the other thing I wanted to ask is what's the proposed monthly payment that you guys are proposing versus
We were trying to give them like $2,300 a month. They want almost $7,000 a month.
I see.
Yeah.
I see. And I think the plan that we're trying to work out with you, and we thanks you for filling out all these forms that me and Jonathan.
Oh my
did.
God, yes.
It looks like our basically our goal is you create a 5-year projection from now on and go back 3 years and see if we can potentially figure out a way to save money so that you can offset the debt that you're actually going to pay for IRS, right? I think one thing that I'm hearing from you, Cheryl, is we every year we pay more, and I can see the numbers that 350K something for 2019, the business is growing to 550 this year in 2020. So meaning we're talking about almost doubling the taxes. So here we come and see if we can figure out a way and plan these taxes. So we save significant amount of money that can pay towards the IRS tax prior debt and help you guys over there. So I think that's the plan that we're trying to tackle.
Yeah, planning for taxes I think is utterly important.
Yeah.
Yeah, because the truth is this has got to stop, and we're definitely going to step in and help you mitigate that for sure, for shizzle, as they say. And it is a matter of, so should we talk about Jay, the potential savings that we found?
I think we should based on
you want to jump into
analysis,
that?
Because yeah, and then the other thing that I wanted to see is, obviously, I think, Jonathan, you talked about, Cheryl, about, how books are. And then I think that needs a little bit of a, love and touching from an accountant. So we need to go through, that's why we need to go back to 2016. What has been missed is the deductions. And the only thing that I'm hoping from you guys, we have a record keeping of at least what we need, right? When you go back and amend taxes, basically I just wanted to see, okay, I need a receipt, right? Bank statement is not enough for me. That's the law. So we need to figure out if we can actually present those. I mean, sometimes, we can recreate those based on emails or substance and whatever. But other than that, if we can figure out a way to, revitalize those record keeping, then we can go back and, bring more savings. And then we went through, so, there's a lot of things that we still need to work on because, we have done preliminary analysis because our engagement officially hasn't started because we haven't signed any documents, and we're just doing this so that we can show you guys how much potentially we might save even before deeping dive into it. And then me and Jonathan, we have we've been doing tax plan for a number of years, and based on the revenue that we have, and we have a projected average saving that we can do every year for any clients in the country, because obviously tax code is similar, then we can actually apply those tax code pretty much to everybody, right? Especially for the business owner, because there's so much tremendous opportunity. And I know a lot of folks does overpay on taxes. And then just looking at the number, having $150,000 in the gross revenue for any client, any business client, our historical data shows that we can save up to $43,000 to be precise, $43,000 in tax save, meaning you could be paying that as a taxes that we can save for our tax. So we just did the projections for next 5 years, just looking at a number and then the growth. We could be saving about $420,000 in taxes itself for next 5 years projections.
Yeah, over a 5-year period, 420,000.
The reason that we do projections is because it's about commitment, right? So you commit to us and we commit to you. We make sure that you save this much amount of money through a substantial, long-term projections. And then this is not just for 5 years. I've been doing taxes. I mean, Jonathan's probably done a lot longer than I do.
Yes.
I've been doing taxes for like 8-9 years now. and a lot of our clients, they stick around for so long and do tax plans because they see potential value in us, and then we invest a significant amount of time to save this much amount of money. So again, Charles, so this is just a projected number. Just looking at the number that you're based on revenue.
It's our minimum savings.
This is the minimum saving the next 5 years that we can potentially save for you guys.
Yeah. Yeah. In fact, in 2020, we're estimating at a minimum to save you $84,000 in taxes. This is the minimum that we're looking at right now.
What are you projecting that our tax? What would be our total tax in 2020 that you're projecting that we would need to pay?
Your total 2020, it would be about $200 and something thousand, something like that. The way business is currently being done, you're looking at over at least $200,000 in taxes. That
we have to pay in taxes?
It will come up eventually at some point, yes. So our job will be to mitigate that completely out of your
So Jonathan,
potential.
I think 200,000 is just it's a net profit. So I think
and the net profit. So the net profit. So you're still so 200,000.
So your net profit that your books is looking at about 200. So that's not the tax. That's not just the tax.
Yeah.
That's the profit. That's not the tax. That's the profit. That's the profit we're talking about. Again, it's hard to tell you right now because the numbers does not look right to me, honestly, right?
They're unreliable.
They are unreliable to tell you. And then in the projection of the saving that I'm looking at, I'm eliminating a lot of stuff from it. Profit and loss that you have created, and then we can see potential saving from those numbers. But if you like to see, if we don't do anything at this point, how much taxes would be? We can probably project and then give you those numbers.
Just out of curiosity, because I assume that we would pay quarterly taxes as we go, so we don't owe a lump sum at the end of the year.
What we do for that is, because I know payroll is you guys put it in your questionnaire about the payroll issue and why we want to mitigate that a lot, because obviously there's garnishments and so forth and so on from the government, right? And so part of that, though, is we're actually required now, unfortunately, to issue you guys wages. And so we want to make sure that we strategically calculate the amount that needs to be paid out to you guys. And so what we do is we use the payroll as a way to file your quote unquote estimated quarterly tax payments. Mm-hmm. So instead of the old way of you would send in an estimated tax payment, we submit it through payroll. And the government's already going to take what they're going to take anyways, but we make sure that it's already being sent to them as part of your advancement of whatever it is that we think you're going to pay.
Oh, I see what you're saying. So it's all bundled up together. So in essence, we're not paying more in wages because it's actually a tax payment that's being made.
Pretty much. And until we mitigate all of the issues in the past, what they're going to take out is they're going to take out, and then they'll just keep applying it. So it's a great way for it. What's nice about that, honestly, is it takes out the guesswork for you guys. You guys don't have to guess anymore. We're just going to come up with a flat rate. And then we just say every month or every 2 weeks or whatever, this is the base salary. This is how much money needs to be set aside in a savings account. And then the next month when it comes up, this is how much money is being pulled out, of course, because you already set the money aside, and that's what's going. And part of, from an entrepreneurial point of view, it's nice to have fixed costs coming out, fixed cash out the door. And so some of that is getting rid of the yo-yo, this up and down effect, and saying this is the base and this is where we want to stay. Yeah. And then that's a nice way, because now we go, okay, that's my fixed cash out. And not just payroll, right? I can help create the budgeting on the side of what else are other fixed related cash outflow. And then that way we have a base in terms of what's my minimum revenue I need to generate so that I can cover my base fixed costs.
So Jonathan, let me ask you a question. So you're talking about setting a salary, which the government, if we get out of this do loop that we're in, is going to garnish our wages that we're both making, which they're going to apply to our tax debt.
Yep.
Can we say what year we want that applied to, or is that up to them?
They apply it first to the oldest debt.
Okay.
Yeah. Okay. That's how it works. Now, once again, though, as we began moving backwards in time, so you got a lot of moving parts. So one thing is that as we begin to fix the past, any payments that were applied to the past you don't necessarily get a refund, for example, if it's being applied to 09, 10, 11, 12, 13, 14, and 15.
Right.
But let's say, for example, we clean up that past super fast and they begin to clean it up. And then any future payments, quote unquote, that are being applied, let's say to 16, 17, 18, and we fix those, the government will turn around and refund the portions back. And then they usually apply it to the next year that you owe outstanding into the next. So they it cycles all the way up until eventually you get the money back.
Okay, that's what they did last year. We overpaid and they applied it to
Yes.
the old taxes. Okay, so 18 is paid, 19 is paid. So
19 is not paid.
or 19 is, well, it's pretty close
We
to
got
being paid.
we got about 15,000 towards it.
Yeah, so we'll see what it is when we file. But I've migrated our QuickBooks to online already. I did that.
Oh, that's
this
great.
year, so
Fantastic.
that I can hand that over to someone who knows what they're doing.
Yep.
It's
We'll be
not
happy to take over.
Yep. And we'll send you how to add us as a user. And so that way it's
I created it with 3 users, so you guys, there's just empty accounts sitting out there now for you.
fantastic. And accountants don't count as well, they count towards 2 extra users that you aren't aware of, but we actually get access that way.
Oh, awesome. Okay.
Yeah.
Cool.
So that's good news to know because that would really help us. And then, of course, part of the onboarding process, I know we're jumping the gun here, but part of the onboarding process is that you would speak with either Paige, who's my director of operations, or even with Jay's team as well to get all of the login information to all your financial institutions as it relates to your businesses. And where do we bank?
Bank of America.
Okay, so I believe Bank of America allows us to actually create our own usernames, which is what we like because we restrict it to only looking at your online work and your bank statements, and then we remove the access to like create checks and things of that nature. Like we can't transfer money back and forth.
Okay.
So it's just access only to look at, to just peek under the hood and just to look at your transactions.
Okay.
Mm-hmm.
So that's what's nice about, and any of the credit cards that you guys are using for business, even if it's in your personal name, but you're saying it's dedicated for business, we want access to those accounts too.
Okay. Okay.
And if there's any question on any of our end, what normally happens is it gets flagged, and then we will reach out to either myself, Jay, or one of our directors, and we'll say, hey, so we're kind of confused. We saw that you went to Crumbles. It looks like it's a cookie shop. Like, what was the nature? And then you'll say, oh, that was my other business, or it was for this business, and I met a client there and we had cookies. You know, I don't know. So the point is that you'll get feedback that says, hey, we're just a little confused about the transaction. And why I bring that up is because if you're using personal credit cards to manage your business, and sometimes you're using it for personal, it flags and we'll just know because we have all this experience, it tells us.
I know, and right now we're doing that with our business account also. We use it for both personal stuff and
Because
business stuff.
we don't want to get the government to garnish it. Even though right now we're in an appeal,
Right.
so there's no
They're not
garnish.
leaning.
They're not leaned, but there's no levies and garnishment at this point in time. We're kind of I just instructed our attorney to keep sending in amendments. Appeals.
The appeals process. Okay.
Yeah, we're just going to be stuck in the appeals process till this is figured out.
But both of us are on the same page that we both need to get a handle on this. We're starting to make a lot more money. We need to become way more financially responsible. And it's like a whole other world. Like, I'm like, money is not just money.
Right. And I think if we really like be disciplined on what we're doing in the projections that we see in the past couple of years, I think honestly you probably guys even don't need to do anything with the bankruptcy and all this stuff, because we can potentially create all this tax even to pay the debt and negotiate with obviously the attorney that you guys are working on, right? And then crack a deal with the IRS that this is what we're gonna pay and this is what we can afford, right?
Okay.
So you guys are aggressive with the IRS. You can stand up to them and deal with them directly, right?
Yeah, so I mean, I'm an IRS enrolled agent, so
Yeah.
I'm actually licensed by the Internal Revenue Service. So it's as if you have your own personal tax auditor working on your side, because auditors that work with the government have to be EAs just like me.
Okay.
So I've had to prove to them that I understand over 700 pages worth of tax law for just business, and another 100, that's like 1,000 pages of personal tax law that I've had to master as well for personal taxes.
Oh, thank you.
So I mean, I've had to do extensive amount of work. Jay is a CPA. He's entitled to the same level of as degree as well, except where Jay's powerhouse comes in is that he is actually an auditor as well for financial statements from the accounting perspective.
Okay.
So what I love about him is he'll look at a statement and go, yeah, I don't understand what this is really about. There's a potential here. Let's talk to the client. Let's get clarity on it. Then you get me, who's like the major powerhouse behind the business tax law side of it. Jay is an amazing tax guy as well on the individual side. So he works a lot with millionaires on that side of the W-2 side. And I work with the millionaires and the pseudo millionaires on the entrepreneur side. So this is why we joined forces, because the truth is when we make you guys millionaires, you're going to have W-2 millionaire problems, and you've got Jay, who's the expert on the W-2 millionaire problem side. So it's really it's like a double-edged sword. And then, like you said, when it comes to the representation side, I can take you guys all the way to the courthouse. I just can't walk into the doors with you. Now, this is where then the tax attorney turns around and hires us as a consultant, and then we walk into the courthouse with you.
Gotcha. Okay.
So you've got some major powerhouses, honestly, it's because you're an architect, are you not, Chris?
I'm a structural engineer. How dare you?
Oh my goodness.
I make their wet dreams stand up.
So you totally get it. It's like working with your structural engineers. I mean, it's like working with top notch. You know what I mean? Versus the contractor that's looking at the plans and putting it together.
Yeah.
Perfect analogy.
Yeah.
You know what I mean? And really the truth is that's what Jay and I are doing right now is we're creating the plan. Just like you guys create the blueprints and you take in all the things you need to look at. We're doing the same thing. And then eventually there's going to be a contractor that's put in place, which is Jay's team, that's going to then build you the house. That's going to then build the structure.
So you're going to take all of this mental stress away from me.
Yes.
Take it on.
Absolutely.
Yes.
That's what we do.
Yes. I mean, I mean, Jay and I, and between both of us, I know a lot of our clients, honestly, that is the biggest compliment we get all the time, which is for the first time I get to sleep at night. For the first time, I don't have to worry about a surprise tax bill. Like for the first time, I'm not afraid to make money because I know the government is going to take 40% of it.
Right.
So that's a biggie.
Just to let you guys know, like right now we're still kind of in the throes of, we get a big check in and then we don't get anything for a while and it dwindles down to nothing and then we get another check. So having all this money to put aside for tax and stuff and salary is really kind of tough right now. However, in the next 3 months, I'm getting about, I'd say at least $120,000 in. So I should be enough to at least get at least a bank account of 50 grand or something like that. So we have the money to do all of this.
Right now.
Yeah. So I've got 2 really big projects that I'm working on. Right. That's why my back was turned to you guys, because I'm working over here while I'm
No worries.
and once those, and I've got a lot more other things happening this year. So we've got some good projects happening. We got to get to that point where we have a good steady account balance.
Yeah, and part of that is so some of our CFO services that we offer is the ability to help you guys to identify key performance indicators. So where does it really count? You remember this, Cheryl, from hearing Sandra talking about it, right? As a CFO, CEO, they really care about key performance indicators. They care about certain numbers. Where is the dial moving? And that's what we help. And then we analyze it and we come back and we say, these are the trends we're noticing that's happening in the financials. And then how do we stop the bleeding? Because let's be real. Right now, you guys have been shot in the gut and you guys are like bleeding out like nobody's business. You know what I mean? You're going to different doctors trying to get diagnosed. You got different emergency rooms. They're all trying to apply different techniques. And for the first time, you guys are meeting 2 top surgeons that are going to take your guys' guts that are pouring out. We got to get you search it up. We got to get we got to get some triage. And just recently we had a client 2 years ago that came to me. They were bleeding $90,000 a month in cash. They were bleeding $90,000 and we put a plan in place for them. And now we finally 2 years later, we stitched it up and now we're finally in positive cash.
Wow.
So it's more than just the taxes, obviously. It's all of the other shit that goes behind it to get us to what we're. So truth be told, is it an overnight fix? The answer is no. It is a long process. It's a patient process, but you guys are working with top surgeons that will make sure that the bleeding gets slowed down, it stops, and finally heals.
And I know that I will be the one who takes on all of this responsibility. So we'll have the discipline to do what you say.
Yeah.
Oh, don't worry. We'll make sure that we'll do things because we're good in follow-ups. We're good in follow-ups, and we do sit down with our client on a monthly basis, either Jonathan or myself, or both of us together if you guys need it. And then we make sure that you understand what's going on, where the leakages are, and where you need to focus. And that's the key KPIs comes along.
Okay.
So that you focus on what you're good at, and then we focus on what we're good at, and we tackle this together to help you guys.
Yeah, we're partners. I mean, it's like we're about to get in bed together, all four of us, and have a nice little four-way. It's just how it works, And I don't know about you guys, but you got to have good partners in bed. I'm just saying. So, you've got some good partners. Sorry, Christopher, you didn't know, but this is me.
You're speaking his language.
You don't. Yeah, I'm the most un-PC.
Oh, perfect. That's perfect. So you're in good company. You're in good company. Yeah. So I mean, this is why I'm saying, like, for example, like we know, like in 2020, we're looking at least $84,000 in tax savings. We know that are a minimum we're going to save you guys, minimum. And then over the next 4 years, it's 420. I mean, it's almost $500,000. Just to say it's $500,000. Here's what I know to be true. When we normally estimate a base savings amount, we're usually wrong in the sense that we save way more than what we estimate.
That's always the case.
It's always the case.
Under promise and over deliver.
Yeah, and it's not because we want to. It's just how it works out. It's just hilarious. Like, we're the ones finally for the first time that get to under promise and over deliver because of the nature of what we do.
Right.
And we guarantee the savings, because if we don't, then we don't charge you nothing. You got us for free.
Yep.
So we make sure that we deliver what we said. But as long as we're a mutual relationship, that you guys do what we said, and if there is any fault or it's in crack, there's nothing we can do, nothing you guys can do, right? As long as we do, and we're in the mutual conscience that this is how we're going to save taxes. And we saw, thank you for doing all this questioning, because it really helped us what you really wanted to do, and now we can tailor the plan towards this, right? So we might even ask you more questions on what do you like, what do you dislike, and what are your dreams, and what do you want to buy, where do you want to go, and you have a vacation, the big travel vacation. We're trying to make this work so that tax is all about not just one thing. Tax is about hundreds of things planning together and put you in a plate and save money.
Yeah.
Right? That's where this number is coming from. Just wanted to elaborate.
And for the first time, we're going to put you into an all-inclusive. We call it it's an ultimate package. I'm recommending it to you because of all of the things that need to be done. The monthly meetings, you need the income and expense tracking every single month, the reconciliations every month, you need the compliance check every month. You need all of the things that you've ever dreamed for. It's going to be here.
All right.
So that's just how we operate. That's how we roll. All right. So we've got 84,000 in 2020. Now, I would love to say that if we could go back and eliminate that $224,000 tax debt, that's going to be another heavenly blessing for you. And part of that, quite honestly, the way that's going to rock and roll for us, the way we're going to structure it, is that we're going to have you guys invest in the basically the compliance side of it, which is essentially amending the returns going backwards. So we need to look at 09 till now, because we had a price point for you guys for 16, 17, 18 to bring everything current. But now that we're talking about 09, I think we should go all the way back to 09 and then talk about your investment for those years too. Okay. Because it would make sense just so we could just say, here's the total price for it all. And then this is the amount to be, to get this thing started. With that though, we probably could do it. We could probably start working on a 2020 plan without having to go back. Because again, you got separate engagements. It's again, in your guys' industry, it's kind of like, and again, I don't really know a whole lot about structural engineering, other than we're going to spend a whole day so we know how your numbers should look. But the truth is if I can get close to an analogy, it's kind of like, we're going to talk about phase one. Phase one is going to be 2020. So in a way, I think it's like with you guys, right? It's going to be like designing, you know, the foundation of a building or something like that. And then once you know the foundation, then we can talk about how to build the beams going upwards, right? So it's kind of like that. And as you know,
We work
each
from the top down, but anyway.
oh, there you go, perfect. Thank you. Let me change my analogy because this actually really helps. So so if you're going top down, so you're going from the roof to the foundation. Is that how it works?
Our bookkeeping is all the loads coming down the building.
Love it. Oh, okay, fantastic. All right.
I would think opposite though.
Me too. I thought opposite too. Like I'm thinking like, oh, like, you know, okay.
Everything adds up at the bottom, so you got to start where it's zero.
That's true.
Oh.
0 is at the top, and then everything loads up all the way down. Interesting.
Yeah.
Which actually, you know, it kind of makes sense because if we can get you guys to save $84,000 in 2020, you know, it's $84,000 that you could apply back to your old taxes. If worst case scenario, they don't budge. I don't think that's the case, but worst case, right? So that makes total sense. So I'll use the analogy. Yes, we want to go up, down, top to bottom. And so 2020, I think we can talk about that, and then we can go backwards in time and address each floor as we move downward and along the structure.
So Jonathan, you'll tell us what we need to pay in salary, what we need to, all of that.
Yeah, for 2020, I think it's a great place to start.
Mm-hmm.
And then as far as the other stuff going backwards in time, it's almost like we could do it on we prefer to just get paid and made the investment all up front for all the years that we're going to do because it makes logical sense. Now, for us, we're a little bit different. We're not working from the top down. In a way, we prefer to work from the bottom up because of historical records, right? You go, oh, 9, but I digress. So for 2020, what we figured, as I said, a minimum investment is minimum savings is $84,000. And what we're looking for is an investment with us for $34,400 to save you $84,000 in year one.
I'm a little confused. Last year, we brought in what, 180,000? 180 change, and our taxes were only like 24,000. I'm a little confused. I don't. Even if we doubled it, it would only be $48,000. How's it 84,000?
Because I think you guys put down, you guys were like $500,000 is what you're anticipating for 2020.
Correct.
Yeah, gross.
Yeah, so because we use gross numbers to calculate this because, again, a lot of the deductions that are missing from your 19 and prior returns, we're factoring that into part of the savings. Like the salary, for example, or fringe benefits, things of that nature.
Because you're currently, your net profit is about 200. I mean, you know, obviously the book needs to be reviewed. The profit would be close to $250,000 just looking at it. I don't even know, you know, if there is anything else that we need to take a look at it and deep dive into. The net profit is 250 versus you guys filed 189 last year. Right. And the saving that Jonathan is mentioning is the one that we brainstormed together is, you know, there's a lot of things that you can still do for 2019 that we wanted to make sure that, you know, we save those money for you guys. Right. So that's where we're coming from.
You're saying that your yearly fee is 34,000?
Our year, no. So the way we work is we essentially charge a one-time flat fee for the plan itself. So it's an implementation investment. Think of it that way. So for $34,000, we basically unlock everything. We tell you exactly what we're going to structure. Maybe it's new entities. Maybe it's the way we pay you. Mm-hmm. Maybe it's how we get Cheryl to go to school. Like, you know, it's all these different things that we're talking about. So it's not just your business, it's your entire tax life. And so it's just a one-time dealio.
Okay.
And then from there, we put you into a maintenance plan to make sure that the plan continues to save you, because every year it's going to be at least $84,000, if not more, every single year.
What's the maintenance then yearly?
So for the full yearly is $33,000 a year
for maintenance.
So what that gives you, Cheryl and Chris, is basically we are your on-call CFOs,
Just they basically
right?
hiring a CFO. Is what
Yeah, so your part-time CFO, we're gonna do your books on a personal and business level, and then every month we're gonna sit down and talk about KPIs, your financials, make sure that your tax get filed. We make sure that you don't overpay on taxes because we're gonna unlock all the mysteries of loopholes and whatnot that's out there and tell you exactly what to do so you don't overpay on taxes whatsoever.
Ever again.
And
And
then
not only that, though, you're going to get your tax prep done, so you don't have to ever
Mhm.
worry about a tax preparation bill, because typically a la carte, we charge about $3,500 to $4,500 a minimum to file tax returns on the side
for corporations.
per corporation. So that's going to be taken care of. If you have Schedule Cs, which like for you, Cheryl, like if you have like a side gig going on or something like that, that's covered, included. Your personal tax return is also included. You get like I said, we get unlimited access, and this is important. So it's not, you don't get 1 hour, you don't get 2 hours, you get unlimited. So if you need to spend a whole freaking day with us, you spend a whole day with us. If you need to spend 30 minutes, you spend 30 minutes. But it's totally up to you guys to utilize that time. And really, we fundamentally believe in access. 100%, without ever worrying about a surprise bill, because normally, like Jay's hourly rate is almost $700 an hour. I bill out at $500 an hour. So, you pick up the phone, we're already hitting the dial button just like lawyers do, right? This is the first time that you eliminate the surprise, because I don't know about you guys, but I hate surprises.
Yeah.
So you don't have to ever worry about that. You can text us, email us, call us. Let's say, for example, you're like, so JB, or Jay, like we're looking at, charging this person $120,000 in gross, in fees. And what is the tax implication going to be by making this move? And then Jay and I we quickly chit chat with each other. We come back and we text you back and say, well, actually, let's restructure the invoice and have it structured like this, and like this to minimize the taxes that could come from that invoice. So it's about real rapid response versus reactionary, which is right now costing you $224,000. That's the real cost. So it's avoiding that altogether. Then not only that though, but we're also going to make sure that you guys are in constant alert. So again, the law's changing. Like we literally last month got new regulation updates on a lovely little tax code that is available to entrepreneurs. Like literally, like it's been in the make. They changed the law in 2020, we finally got final freaking regulations.
Wow.
So now that we know that we have final regulations, guess what we're doing to all our clients? Now we got to change direction on the ship. Now we got to re-steer the ship, which is your plan, to make sure that we continue to save those savings. Another wonderful benefit is you get the accounting work. I mean, accountants, like, for example, we work with me. Even if you were to buy a la carte back in the olden days from us, we charge $1,500 a month just for bookkeeping and accounting work. Jay's company is the same way, charges $1,500 minimum a month. So in a way, you're getting all of this extra cool stuff at a fraction of the cost, actually. And more importantly, it's not even a cost to you guys, because the truth is without utilizing us, you will be paying $84,000 more in taxes in 2020.
Yeah, still, your $84,000 just perplexes me. It makes no sense. It makes no sense if we had $500,000 and we take $200,000, that's $300,000 we're getting taxed on.
Chris, I still think there is a lot of stuff that is on the P&L. It's not tax deductible. A lot of them. Just to give you a quick example, there is a IRS tax that you pay for $14,000. That's not deductible. There is a health and medical. It's asked for. It's not deductible. There is a way we can make it deductible. There is a plan around it, right? There are some uncategorized. I don't know what that is. So, like I said, I mean, these numbers is going to go higher than what the profit and loss looks like. So our $84,000 of taxes is an estimate, but again, we need to deep dive. So based on all the projections, right, we're not really officially engaged. That's why we're saying that this is the minimum that we have historically done for any of our clients, whoever has a revenue of at least $500,000
yes.
or $400,000,
yes.
right? Because there are so many missed deductions that are out there that we can bring it up.
I mean, to give you an idea, there's over 400 legal deductions allowed under law. And here's an interesting statistic. Now, for you, Cheryl, I'll talk to you in a sense. And Christopher, this applies to you, but to Cheryl, which is something interesting, is that because Cheryl, we're going to put you on payroll, right? Like this, we're going to be clear here. Whether or not you do stuff, we're putting on your payroll. That's a no-giver. And so because of that, we might want to think about adding you on under the corporate documents, because now you become a woman-owned business, and there's a whole bunch of additional loopholes that open up to us when we are a woman-owned company. Now, Chris, what happens there is you still get to make all the decisions, baby, so don't lose out on that one. It's just, it looks like on paper to free up more opportunities on paper. And so this is all part of the task, part of the analysis, part of what we're doing to brainstorm to save you guys this kind of money.
Okay. Well, obviously this is a little bit of sticker shock, so let us
Sorry.
And how do you expect to be paid, Jonathan? Is this like an upfront, here's a check kind of thing?
Yeah, so the way it would work is if you guys wanted to at least get the plan started and rocking and rolling, so we can come back with you with a plan. Whether or not you pick us to implement it is a whole other ballgame. But if we at least can create you a plan, then we just ask for the $34,000 one-time payment.
Okay.
Not gonna happen.
Well, we'll have a
Not
conversation
gonna
about
fucking
it.
happen. Thanks, guys. Goodbye.
All right, Jonathan. We'll have a combo, and I'll talk to you later.
Sounds
Thank you,
good.
guys.
All right,
Thank
guys.
you.
Bye.